Hey everyone, thanks again for making it back to my channel. For those who are new, this is the Finance Hub, and on this channel, I try to help you understand the complex and yet exciting world of finance by providing you with information that could assist you in making an informed decision. Today, we're diving into what you need to know before buying real estate. Investing in real estate can be a great way to build long-term wealth, but there's a lot more to it than they show on HGTV. It's not just about flipping houses for quick cash, and it definitely comes with its own set of risks. Before you even think about buying your first rental property, you need to understand what you're getting yourself into. That's why we're going to break down everything you need to know about property investing. We'll cover the different types of real estate investments, the pros and cons, and how to get started the right way. Make sure to stick around until the end because I'm going to share some crucial tips that could save you thousands of dollars and countless headaches. And as always, if you find this video helpful, don't forget to like, subscribe, and hit that notification bell so you don't miss out on future videos. Now, let's get into it. So, what exactly is property investing? In a nutshell, it's all about buying, owning, managing, renting, and/or selling real estate for profit. It's about leveraging this tangible asset to generate income and build wealth over the long term. Now, you've probably heard stories of people making a killing by flipping houses or becoming real estate moguls overnight. And while those stories can be exciting, it's important to remember that property investing is a marathon, not a sprint. It takes time, research, and a solid strategy to be successful. Think of it like this. You wouldn't just buy a stock without doing your research, right? The same goes for real estate. You need to understand the market, the property, and your financial situation before making any big decisions. One of the most common ways to invest in property is by buying a rental property. This could be a single-family home, a condo, or even a multi-unit building. The idea is to find tenants who will pay rent, which will ideally cover your mortgage payments and other expenses while also generating some passive income. But property investing isn't just limited to residential properties. You can also invest in commercial real estate, like office buildings, shopping centers, or even industrial warehouses. These types of investments can offer higher potential returns, but they also come with higher risks and often require more upfront capital. Now that you know the basics of property investing, let's dive into the different types of investments you can make. As I mentioned earlier, residential real estate is a popular choice for many investors, especially those just starting out. Within the realm of residential, you have single-family homes, which are exactly what they sound like, a standalone house designed for one family. Then you have condos, which are individual units within a larger building or complex. Condos typically come with shared amenities like pools, gyms, and security, but they also come with monthly HOA fees. If you're looking for something with multiple units, you could consider a duplex, triplex, or even a larger apartment building. These properties can provide a steady stream of rental income, but they also come with more responsibility in terms of management and maintenance. Moving on to commercial real estate, we have office buildings, which can range from small single-tenant properties to massive skyscrapers. The income potential for office buildings can be significant, but it's also heavily dependent on the local economy and the demand for office space. Then there's retail space, which includes everything from small storefronts to giant shopping malls. Investing in retail can be risky, especially with the rise of e-commerce, but it can also be lucrative if you find the right location and tenant mix. And let's not forget about industrial properties, which are often overlooked but can be incredibly profitable. These properties include warehouses, distribution centers, and manufacturing facilities. With the growth of e-commerce and the need for storage space, industrial real estate has become increasingly popular in recent years. And finally, we have land, which is the most basic form of real estate. Investing in land can be a long-term play, as you're essentially betting on the future development and appreciation of the area. Now, before you go all in on your first property investment, let's talk about the pros and cons. Property investing isn't a get-rich-quick scheme, and it's important to understand both the potential rewards and the inherent risks involved. One of the biggest advantages of property investing is the potential for high returns. Real estate has historically appreciated in value over the long term, and it can also generate passive income through rental payments. Plus, there are significant tax advantages to owning real estate, such as deductions for mortgage interest, property taxes, and depreciation. Another benefit is that real estate is a tangible asset. Unlike stocks or bonds, you can physically see and touch your investment. This can provide a sense of security and control that some investors find appealing. However, property investing is not without its drawbacks. One of the biggest risks is the potential for market fluctuations. Just like any other investment, real estate prices can go down as well as up. The real estate market is cyclical, and economic downturns can significantly impact property values. Another downside is the illiquidity of real estate. Unlike stocks, which can be bought and sold with a few clicks, selling a property takes time and effort. It can take months to find a buyer, negotiate a price, and close the deal. And let's not forget about the responsibilities that come with being a landlord. Dealing with tenants, handling repairs, and managing the property can be time-consuming and stressful. You need to be prepared to wear multiple hats and be responsive to your tenants' needs. Now, for those of you who are ready to take the plunge, let's talk about how to get started in property investing the right way. The first step is to educate yourself. Read books, listen to podcasts, and learn as much as you can about real estate investing before you put any money down. Next, you need to determine your budget and financing options. How much cash do you have available for a down payment? What kind of mortgage rates can you qualify for? Getting your finances in order is crucial before you start shopping for properties. Once you have a good understanding of your financial situation, you can start researching potential markets and properties. Look for areas with strong rental demand, low vacancy rates, and potential for appreciation. Consider factors like job growth, population growth, and proximity to amenities. When evaluating properties, it's essential to do your due diligence. Get a professional inspection to identify any potential problems or repairs that may be needed. Review the property's financial history, including rent rolls, expenses, and any outstanding liens or violations. And don't be afraid to negotiate. In a competitive market, you may need to offer above asking price to secure a property, but in a buyer's market, you may be able to get a great deal if you're willing to haggle. Now that you have a better understanding of the ins and outs of property investing, let's talk about how it fits into your overall investment portfolio. One of the key benefits of real estate is that it can provide diversification. Diversification is the practice of spreading your investments across different asset classes such as stocks, bonds, and real estate to reduce your overall risk. By adding real estate to your portfolio, you're essentially hedging against potential losses in other areas. For example, if the stock market takes a downturn, your real estate investments may hold their value or even appreciate, offsetting some of your losses. Real estate is also less correlated with the stock market than other asset classes, meaning that it doesn't necessarily move in the same direction. Another way property investing can enhance your portfolio is through its potential for long-term growth. As I mentioned earlier, real estate has historically appreciated in value over time. While past performance is not indicative of future results, this historical trend suggests that real estate can be a valuable tool for building long-term wealth. Furthermore, rental properties can generate passive income, which can supplement your regular income and help you achieve your financial goals faster. This passive income stream can be particularly valuable in retirement when you're no longer earning a salary. And that's a wrap. Property investing can be a game changer for your wealth building journey, but it's important to know the facts before diving in. Thanks so much for watching. If you found this video helpful, please like, subscribe, and share it with anyone interested in real estate. And if you're ready to learn more, check out our next video. In our next video, we'll be diving deeper into specific strategies for finding profitable rental properties, analyzing deals, and maximizing your returns. We'll also be exploring advanced topics like property management, lease agreements, and legal considerations. So if you're serious about taking control of your financial future and building lasting wealth through real estate, make sure you hit that subscribe button and turn on notifications so you don't miss out on the next video. Until then, happy investing.